Okay, everyone. So we're going to talk about the manufacturing PMI data that came out of China today, which is very, very, very important for the market. So look, manufacturing came out at 50.1, above the level of 50. This is very important because remember, China has now ended their lockdowns. After 2 years of trying to suppress COVID, they've given up on the strategy because you can't control the virus from spreading. And it's just been damaging their economy, okay? So China's reopened, which is very important for the rest of the world because China is the world's manufacturing capital, okay? They manufacture goods for the rest of the world. As I'm sure you're aware, go anywhere in your home and you're gonna see made in China. All right, now this is very important for a number of markets because of China being number one, the second largest economy in the world, and number two, being the key trading partners for a lot of countries. So, for an example, when China announced they was ending their lockdowns in early January, the first week of January, we saw immediately crude oil prices jump. And since the beginning of January, we've seen crude oil go up by around, it was up 15%, now it's currently up 10%, okay? So a jump in crude oil. Why? China is the biggest oil importer in the world, okay? Then we saw iron ore prices from the beginning of January also jump up on the reopening news, okay? So we've seen iron ore prices go up by around 15%, okay? Iron ore is Australia's biggest export. So if you look at Australia, we can see their biggest export is iron ore. Who are they selling it to? China. 80% goes to China. So the moment the markets knew China's reopening, iron ore prices bounced higher. And this also pushed up the Aussie dollar at exactly the same time against the US dollar. When it went up 6.3 or 6.5%, it's now up 5%, okay? And then on top of that, we saw the euro jump higher against the dollar on the first week of January after that news was announced. Why? Because Germany, the economic powerhouse of Europe and the manufacturing capital of Europe, where do they sell their goods to? Their biggest trading partner is China alongside the United States, okay? So China is a key player to the global economy. And I'm going to show you the importance of manufacturing and how it affects the markets, all right? So here was the period last year in around April when the manufacturing data dipped below 50. It went from 50.4 and in April it fell to 48.1. Okay, so remember, a lot of businesses in China are manufacturing companies. They're biggest businesses almost, right? So any slowdown in manufacturing is going to affect the Chinese economy. And then 5 days later, on April the 6th, the services PMI went below the level of 50, indicating companies in the services sector and the manufacturing sector are both going through a contraction. Okay, what happened? On that same day, April the 6th, iron ore's price tumbled in value. Why? Because iron ore demand from Australia is coming from China. What happened to the Aussie dollar at this exact same date? Okay, if we go back and we look, what happened to the Aussie dollar against the US dollar? Here we go, April the 6th, on that same date, look what happened. Boom, Aussie dollar sinks. And look, you can see if you line up the charts on the bottom and the top, you can see, look, they move at exactly the same time. And then look what happens when the iron ore prices rise. That's exactly the same time when the Aussie dollar rises against the US dollar. So why does that happen? As I was showing you, Australia's key commodity export is iron ore. So here is iron ore highlighted in red, and in green you have the Aussie dollar against the US dollar. Remember, iron ore is sold in US dollars. So when the demand for iron ore is going up, causing its price to rise, Chinese buyers of Australian iron ore have to sell the Chinese yuan into US dollars, then sell US dollars into Aussie dollars to buy the iron ore from Australia because it's priced in dollars, because the dollar is the world's reserve currency. So you can clearly see why there is a very strong correlation to the price of iron ore going up and down and the Aussie dollar getting stronger against the US dollar and then weaker. Perfect correlation going back to February 2006. Okay, so you can see there's a correlation between the Aussie dollar getting weaker and iron ore prices. Okay, or the Aussie dollar getting stronger and iron ore prices. And it's all coming from the demand from China, okay? This is key. This is also key to why we've seen the euro strengthen against the dollar since the beginning of the year when the news was announced that China was ending lockdowns, oil going higher against the dollar, and especially the European stock markets going higher since the beginning of the year, as soon as China announced that they're ending lockdowns. So we just need to understand that global trade between countries is going to have a big impact on the markets. Okay, so this data coming out has been positive, but this data was the government's official data. Now, investors don't like paying attention to the government data in China because they're known for just making up numbers for political purposes to basically make their economy seem like it's doing better than it is, so they remain in power. Okay, it's renowned that people just ignore these data points and they'd rather go to the private sector reports, which is this report here, which is done by HSBC, okay, a bank. The markets pay more attention to the bank one than they do to the government one. All right, so that's really important to understand. So we're going to wait for the private sector PMI's data to come out, and if they both go above 50, that's very positive. So what could we see? If China's growth really does keep picking up, then you could see commodity prices going higher. Goldman Sachs have oil going to $100 a barrel. That's a 20% move from the current price. We have the European stock markets that have rallied already 10%. The best January, I think they're saying, like 10 years. Again, could continue to rally higher should China's economy pick up momentum now that it's reopened. And then again, the Aussie dollar going higher against the US dollar can easily continue if iron ore prices keep rising. All right, so that's a good fundamental picture for you to get into your mind. Oil prices are driven by China because China is the biggest consumer of oil. Europe stock markets and the euro can be affected by China because Germany and many other European countries, China is their biggest trading partner. And then you've got, again, currencies like the Aussie dollar getting stronger based on what happens with iron ore prices. Why? Because that's where Australia is selling iron ore to, China. So the reason I did this video was just to point out the obvious. Fundamentals drive markets. So it's really important to understand the relationship between commodities, currencies, the stock markets, and the world's second largest economy, China. All right, guys, so if you enjoyed this video, please like, comment, and subscribe. And I'll be sharing some more videos with you shortly soon. Thank you.